ITC posted a mixed set of numbers for the first quarter. Profit and margin came in above analyst expectations, but revenue failed to meet expectations. However, the bigger news in focus is the ITC hotel demerger math. The conglomerate announced that shareholders of ITC will get 1 share in the demerged hotels business for every 10 shares held in the parent company. ITC is likely to get the new stock listed on exchanges in another 15 months. Let's take it across to Vinny for more details.
Yes, so if you look at ITC's numbers, revenue was a bit of a miss coming in terms of the expectations that we had at ET Now. Revenues came in at 15,828 crores, which is a decline of around 8% on a year-on-year basis when you compare the revenues. So yes, a bit lower than what we were expecting, but profit above expectations. Margin, strong expansion on that front, the EBITDA margin front. So above expectations over there. Cigarette volume, we were expecting at around 7%. It's come in at around 9 to 10% is what is inferred number as. The company doesn't give a number, so the inferred number is coming in at around 9%. So yes, that was also better than what the street was expecting as well and what we were expecting at ET Now as well. So all in all, yes, not a bad set of numbers coming in from the company. Only a miss coming in on the revenue front, and that is mainly because the agri business, that saw a sharp decline coming in of 24% in terms of the revenues of the agri business. Paper business, in terms of demand over there, that was also a bit subdued in terms of revenue growth. That was a 6% decline in terms of revenue over there. Hotels business, muted growth of around 8%, we could say, not as much as we'd seen last year, but yes, there was a high base there effect that is coming in there as well. FMCG business, strong growth of 16%, and cigarette business, that's also seen a good growth of around 13% this time on a year-on-year basis. So yes, all in all, a decent set of numbers. Now, when you look at the EBIT performance and the EBIT margin front, yes, cigarette business, that has sustained the growth. Staples like biscuits, noodles, beverages, dairy, agarbatti, premium soaps, that's driven the growth for the FMCG business. Hotel business has actually reported the best ever Q1 in the hotels business. The ARRs have also shown a strong growth as well, is what the company highlighted. Agri business impacted due to the export restrictions that we've seen coming in. And in terms of, when you look at it in terms of the EBIT margins, cigarette EBIT margins, slight bit of a contraction there. FMCG, hotels and agri business, that's seen an expansion in EBIT margins, and paper business, that's seen an contraction in terms of the EBIT margins. Stock is currently trading at 24 times the FY25 EPS. So let's keep an eye out on ITC on the back of its numbers for sure.